Check the mic and make sure it sound right, boys.
Hey, what's up guys? In this video I wanted to share with you the rules for the bearish Gartley pattern, and of course if you want to trade the bullish version of this, you just flip it over and trade the opposite. I'm going to go through the rules that I have right here, a little hypothetical Gartley, and then we'll go through an actual one on the charts. But basically here's the rules. Is you all want to identify your initial anchor leg, your X to A leg. You're going to take your Fibonacci retracement from X to A. And like it says here, XA must touch the 618 but cannot touch the 786. So this can be your wick, this can be your candle. Either one has to at least touch the 618 retracement of this B leg, but cannot touch the 786. Touch the 786, you're getting into butterfly territory and it's not a Gartley anymore. So once we have that, you can see price came up, touched the 618 right here, but we didn't touch the 786. So that's our first measurement. Our next one, we want to take Fibonacci retracement again from our A to B leg. Like it says here, A to B must touch the 618 but cannot violate A. So you can see price would have come down here. This C leg, we would have touched the 618, but we did not go below this A leg. So if this was to come down here, it could go real close to A, but if it goes past A, that's invalidates the pattern. So has to touch the 618 but cannot go violate A. So now we have our first two. We have our X to A, or A to B, or B to C. Now we want to measure our D completion. For that, we're going to need our Fibonacci extension tool. We're going to take that from A to B, back down in. Gartley completes at the 127 extension right here, or D. So we're going to have completion right here. For drawing your Fibonacci targets on, you're going to want to go from A to our D completion. Traditional targets are at a 382 and a 618. I've been recently testing a retest of these lows right here at A, and that's had pretty promising results. But 382 and the 618 are your traditional targets. And then of course for your stops, you want to have them above this structure level at X. You know, you can do a Fibonacci inversion. A lot of people like to do 113 for stops. Test the 127. I like that as well. Of course, you get a lower risk reward. Some people like 1 ATR. So if you draw on a level right here, you could take your ATR 43. I'm gonna try and do some math on the fly here. So 41 plus 43 would be 84. You know, you could do ATR based stop, Fibonacci, whatever. But these are the rules for identifying it. And you want to try out some different targets, different stops, see what you like. So that's the hypothetical one. Let's go onto the charts and measure out a real one. So you can see right here we got a nice little bearish Gartley. Let's go and draw some retracements on. We got our initial anchor, X to A, right here. Price action came up, touched the 618, but did not touch the 786. That is valid for our first leg. So we're going to go retracement A to B. Our second leg came down, touched the 618, did not violate A. This came down here. The wick, the close, whatever, touched or came below the A leg, that would invalidate it, but we hit the 618 and then stayed away from A, so that's valid. For our D completion, we're going to take Fibonacci inversion from A to B, back down in, completes at the 127 extension. That's where we put our limit order in. Stops, say you did a 113 inversion, would go right here. Like I said, you can do a inversion, stops, you can do an ATR, whatever floats your boat. For this example, we're going to do a 113 inversion. There's our stops, targets, conventional targets, 382, right here. Target 1, conventional target 1, conventional target 2, 618 retracement of A to D. So we got our entry right here at the 127 extension. We got our stops in. We got limit orders for targets 382, 618. So I like to drag my Fibonacci retracement along with price, because if we're basing off our targets off of Fibonacci's, it wouldn't make sense to just price to go up and to leave these here. So as this, see, we get filled right here, price goes up, we're dragging our Fibonacci's along, almost came down and got target 1s right here, but didn't happen. Got close to our stop, flipped around, came down here, hit target 1. A lot of people like to roll their stops to break even. Down here, target 2 right here, and we'd be out of the trade. That's the conventional targets. I like to test different stops, different targets. Maybe you want to go for a little higher risk reward, maybe you want a higher run rate with lower risk reward. So that's really up to you. One thing will really help with that is don't take my word for this pattern. It's a pretty long standing pattern, but you need to go out and backtest this yourself. Run through the charts, identify and take some notes on what kind of targets and stops you want. I've developed this little spreadsheet for backtesting. This is what I use for backtesting. It'll show you your yield for each year. It'll show average yield, your max drawdowns. You can even go in here. It'll have your entry dates, your pairs, entries, stops, targets, whether you hit those or not, your risk rewards, your returns. You can take little notes here. It'll show you your win rates, target 1s, target 2s. You want to go target 3s. It'll show you your equity, your max. It'll calculate your max drawdown for you. You can go over here and it'll show you your equity on a little graph. So if you want to use this spreadsheet, it's free. I made it for me, but I like to share it. There's a link to that down in the description of this video, so go check that out. And yeah, get back testing on this. Try different stops, different targets, different ideas you might come along with, and go out there and get some results. Thanks.